Ladies and gentlemen, let us continue the second sessions of this afternoon. Futures and CFDs are two of the most widely used instruments in the retail online trading space, and many might debate whether one is better than others or should we have it all. In these sessions, double the fun, future and CFDs in the retail space. Our moderator, Valerijus Ovsianikas, CEO of Tickmill Europe, and esteemed panelists will explore the futures and CFDs frameworks, risk management, and the touch on the European regulatory compliance. Let's wait no longer. Please welcome our esteemed speakers.
Thank you. Hello, everybody. You are welcome to join us today. Hope you are fine this afternoon. I am Valerijus Ovsianikas, CEO of Tickmill Europe, and that's member of Tickmill Group. We have today interesting, funny name of our session, Double the Fun. We are three of us, so we can triple, not a double. Okay, it's a serious topic about futures and CFDs, how it looks like ecosystem of this products. But first of all, let me give a possibility for our guests to introduce themselves, to tell a little bit more about experience in futures business.
Oh, okay. Right, so I'm Richard Stoker. I'm here to represent CME Group, the world's largest derivatives exchange, 170 years old. Historically, we were always very known as a kind of institutional player in the space, but more recently, we've been very active in the retail segment as we develop more and more products that are suitable for the self-directed trader. My experience spans about 37 years now, starting as an open outcry trader myself back in the trading peaks in the late 80s. I actually started off as an options trader before futures, but I've been at CME Group now for about 14 years.
So you still remember this time that it was trading pit and it wasn't like one only screens like today.
Yes, indeed. I mean, when I first started, it was a fantastic experience of being in a trading pits, but you are constrained by the length of your arms. So you can really only, unless you're Mr. Tickle, you can only really trade one product at a time. Obviously, the kind of screens democratize products a lot more. And before I left trading to go and start at CME Group, I think I had 8 screens with about 16 different markets per screen.
Fantastic. Pavel, about you, you are for last 4 years CEO of Scope Markets. What is your experience with Forex and in futures also?
Yeah, thank you, Valerijus. Yeah, so I'm Pavel, CEO of Scope Markets. We are I guess a multi-divisional group. So we have retail business, institutional business, and we're actively diversifying into various product lines. So futures is one of the, or futures and options, DMA products is something that we've recently started looking at. So my background and experience is primarily in the OTC derivatives. So that's where CFDs would come or fall into. I have personal experience, so I've started trading with CFDs, and I've also traded futures, but personally, essentially. So yeah, so we are actually starting to work with Richard quite closely.
We just had lunch, didn't we?
Yeah, we're just at lunch, so this is all a little bit scripted. I'm kidding, but yeah, we're exploring and actively developing the partnership. So we've started with the institutional side, and then I represent at Ruster Group. I represent the Scope Markets brand, which is a retail brand, and so we're starting to explore that partnerships across retail traders as well, because we feel that there's synergies between CFDs and futures.
Recently, a few hours ago, I met one guy who is representative of trading platform, and naturally I asked, do you provide futures? And he told me that, oh yes, of course we provide futures like all other instruments also. I asked what stock exchange you communicating and represent, and he told what, why we need a stock exchange? And he told after we clarified it that we're talking about CFDs for futures. And I think it's important to clarify here, and Richard, you can tell us what is the difference between futures and CFD for futures.
Yeah, I mean, it's very interesting to me, coming back from a futures background, especially at conferences like this, when they think kind of futures is a new kind of buzzword in the industry. Futures have been around since kind of biblical times, when people were basically agreeing a price for something that would provide in the future. As I say, CME Group's been around 170 years now. CFDs and spread bets have been around 30 years. Anyone on their platform that is offering some kind of gold product, crude product, US 500, NASDAQ 100, tech, whatever it is, they're derived from the futures pricing. Okay, so the underlying source of liquidity for many CFD products comes from futures. So I will say we can't trade the name futures. So, I mean, some platforms do obviously kind of portray the fact that they have forward CFD pricing, which has kind of futures-like, but it probably isn't what I'd recognize as futures myself.
Yeah, it's interesting. Pavel, how it looks for you, what the prospect futures have, and what, let's say, we will discuss it more about pros and cons, pluses and minuses of this business line.
I mean, I see, obviously, like it's an asset class that, I mean, my firm is actively exploring. I feel there's a natural sort of extension. I feel like, I mean, clients that are trading CFDs would, futures have many similarities to that. I think the reason, I mean, I agree with Richard, like people tend to look at them as two very distinct products, but ultimately, like the actual, exposure that you're buying, because I mean, both are derivative on the underlying asset. From an exposure, from a financial risk point of view, they're very similar. Yes, you do have, the execution rules are different or the margin rules are different. I feel sometimes, and I come from a, let's call it CFD background, but also I've gone through a bit of a learning curve myself. I feel there's a lot of misunderstanding, what the CFD is. I feel like the industry since between 2005 and now created this almost like hype, and so people, like you speak with, and I'm not saying everybody, but there's a large majority of people that don't understand essentially what they're buying exactly. So I feel like if you look at the underlying concept of what a contract for different does, then you would quickly realize that future does something very, very similar, especially with today's, because, well, Richard has a lot more experience, but, like futures originally were meant to hedge against, sort of uncertain outcomes, right? And there were physical deliveries, like airlines do that today as well, but it's the speculation that has taken over. Most futures today are basically cash settled, so essentially they're very, very well. You have the expiry, but in terms of the exposure, that's very similar to CFDs. So with that in mind, I feel, for people that are trading CFDs today, future represents not necessarily a totally different product, but more of a product with different characteristics.
Oh, on the brokerage side, how it looks for you? What the challenges you see in this business line, and what advantages it can be?
Well, the setup is going to be different, because the way you, basically the setup, like the way you, let's say, set up, for example, clearing rules, your connection with the exchange, you cannot, the routing rules, they are kind of prescribed in a way, so you don't have with CFDs. You have options there. You can market make, you can, manage risk, you can create like quite exotic setups. With futures is a lot more straightforward. So I think the number one challenge is to make sure that you actually have the setup. You have all the counterparties, because you need to have the clear, you need to have, relationship with the CME as an example. So I think you need to have the setup. That's number one. Number two is the trading platforms, right? Like in our industry, especially with, let's say, majority of brokers, today, are probably split between, MT4, MT5, C-Trade, a couple of platforms. So these platforms are not, let's say, natively built for these products. So you would need to then overcome the technical challenge around integrating that. Or you would need to consider building something that is specifically dedicated, to futures and options trading. So I think these are the kind of the challenges. So you have the client-side challenge and then the brokerage setup challenge.
Talking about futures business, it looks like it has an image like more conservative business line, where you're getting its background is commissions based, and we cannot to be market makers there. This let's say image of conservative is probably a little bit wrong. That I saw that on the CME also, it's a lot of news. And may, Richard, you can share with us what news and what perspective you can expect.
Yeah, I mean, we don't see, I mean, I'll let you into a little secret. We were kind of discussing this kind of topic for the event today, and it was like, should we call it CFDs versus futures? I was like, look, no, because I don't see it, CFDs versus futures. It should be CFDs and futures and about offering the customer choice. I think one of the reasons CFDs have exploded over the last 30 years is because their flexibility of size. So people with lower account sizes got more flexibility on how much they want to trade. Three things are happening that are exploding growth for us in the retail segment. One is the underlying kind of trader is demanding access to the source of liquidity, which is often futures. Second one is the flexibility that used to be only in the CFD world is now come to the exchange world, okay? CME Group, as we've recognized the opportunity in retail, we've done a lot of work to make smaller products that are relevant to a self-direct trader. So we've got micros across about 27 of our flagship contracts now, which is pretty much a tenth of the size. We've launched a lot of kind of zero DTE, kind of daily options, which are kind of more flexible for the kind of retail end user. And we're actually going one better. And as of 2 weeks' time, on the 30th of June, we're launching something called Spot Quota Futures, which is even a 20th of the size of our micro NASDAQ, which you can actually trade with $100 a margin on a $2,000 notional. So I think all these things have kind of really kind of flagged it to the end user that there is kind of alternative if you want that.
I can share with you some findings on Tickmill side when we started our futures business more than 3 years ago. We expected that we will have some type of cross-selling. You know, when you have 50,000 active clients, then you expect if, okay, only 1%, only, it's almost nothing, will trade also futures. It will be like for beginning 500 clients minimum, and it can growing profile of clients base. So, but what we found out is that it's different type of clients. It's like you must fulfill demand what is on the market, because if you provide for retail client who expect to deposit like few hundreds or thousand euros, it almost nothing to do in futures side. So then can you share with us what a typical profile of clients you expect, and what you're working with, let's say, that's what a type of clients is oriented, like a product?
So as I say, beforehand, when we pre-2019, when we had the micros, it was more the sophisticated trader who would be basically trading on a kind of desktop probably, and this would be the typical dentist that reads the Wall Street Journal that basically trades futures in between doing fillings. That demographic has totally changed over the last 5 years as we've gone smaller products. And it's even the brokers as well, because the brokers are recognizing that they need to be multi-asset now. People probably are leaving their platforms, especially the bigger platforms, to go and trade futures somewhere else. So a lot of the kind of CFD-only brokers are now trying to go kind of product agnostic and become investor platforms. And they're probably seeing the multiples kind of grow on that too. But yeah, our demographics totally changed as the environment's totally changed.
Yeah, interesting. Pavel, how it looks ecosystem of futures for you, like a brokerage company?
I think we need to also, maybe just a refresher, or maybe for some people for the first time, like we need to understand how the liquidity chain works, right? You have the end client, then typically, let's say in the industry, you would have a retail broker, you would then have an institutional broker, a liquidity provider. I mean, they're called under different names. Sometimes you would have a number of them in the chain, but ultimately that last player would be hedging off exposure on the exchange. So like in a way, like, you know, even though you're buying a CFD, you're indirectly buying a future, or sometimes an underlying asset, depending on the hedging rules. So, but to your question, Valerijus, we are, you know, for us, it's exciting because it opens doors to new markets, US, for example, or some markets in the Middle East or in Asia, where CFDs, Spain actually is a great example. You know, solicitation for CFDs is prohibited by the CNMV. So, but futures allows you to do that because it has a more robust regulatory framework. So we don't see it like from our point of view. We see it as a as a growth product, and that like of course, like because there's products in between as well. You have your retail customers. Like an example would be this product's called CFD futures. So there you have a subset of customers who'd be interested in the actual DMA future. So we feel there is both the cross-sell opportunity that you also mentioned, your experience at Tickmill, but we also look at it from a new market point of view, the clientele. There's prop traders, there is brokers that specifically want futures, there is retail clients. So there's we see it as a overall as a growth product.
I think you bring up a good point in terms of regulation. So the regulators want fairness and transparency. Okay, they want the client to have best chance of success, and what does that look like? As I say, when I'm speaking to some brokers, say, why should we list futures instead of CFDs? I'll say, well, no, kind of a rising tide kind of lifts all boats. Okay, it's as I say, we kind of mentioned giving the customer choice, but when you think about how exchange works, you've got thousands of people competing to give the best bid and offer, rather than the house basically making that price. And you see that a lot of times on kind of stops, and I've used this, forgive me if anyone's heard me say this before, but on the kind of Liz Truss mini budget, when cable tanked to, I think the futures low the next day was 103.94, a lot of kind of CFD firms, their best liquidity source was parity. So people were coming back in the next day and it was trading 110 again. They're saying, right, who's taking the upside of that? And a lot of time it's the house. So I think just kind of the transparency of futures kind of plays out effectively in these conversations.
Yeah, you have just very quickly. You have also like some of the limitations around, the Richard mentioned transparency of pricing, top of book, right? It's not clear. Like when you look at the CFDs, and like some brokers would disclose that, other brokers would kind of give you a limited picture, so other brokers won't, give you anything, right? So with the exchange, obviously, you can see what is going on. You can purchase different data plans. You can see the open book. You can see how much liquidity is there at different price levels. So for more, let's say, advanced people that have specific price point strategies, it's an excellent product for that.
A few days ago, I saw news from CME Group about spot quoted futures. It's interesting that it's nice to see that you are developing a product and entering something that approaching more retail clients. What it is?
So, as I say, this is a product we're launching on June the 30th, and we're initially launching it on all 4 equities. So basically Russell 2000, Dow, NASDAQ, S&P, and 2 crypto products, so Ethereum and Bitcoin initially, okay? There's 3 differences to our regular futures offering. One is the notional. It's way small. As I say, it's basically a 0.1 of an index in NASDAQ, 1 times index in S&P, and kind of variation of the other 4. We've actually kind of increase the expiry from either monthlies or quarterlies that we normally have, and we're actually having a 12-month expiry. Okay, so
then expiration is quite longer, and
so it's like quite perpetual, but it's kind of it's going out longer. So if people go on holiday and they want to be long gold, and they come back, instead of complaining to the broker saying, okay, I've been kind of expired, I've just got a kind of cash equivalent, they are still on the product. And the other one is the spot pricing. So we're actually kind of launching it in spot pricing. So sometimes I'm not sure if CFD brokers have had this, when people say, okay, these prices I'm seeing on the screen for futures are different to the screen I would see on Bloomberg or CNBC. It is a spot convention, and there's going to be notional adjusters at the end of every day. So it's very more like what a CFD end user would feel with the benefits of futures. Plus, one last point on this as well, it's a mass market product that doesn't currently exist in the US, okay? If you've got 150, 250, 500 bucks in your account in the US, you're probably not trading futures.
Yeah, thank you. I see one additional advantage of futures implementation and promotion is that in CFD area we have a lot of restrictions now. We cannot promote it in many countries like Spain or Portugal or France. It's almost banned. And but it's a different story when we're talking about exchange traded products. So then, Pavel, do you see that we can use it like a marketing tool?
Yeah. Well, I mean, yeah, that's basically the example I also made. So Spain, a good example. You cannot market CFDs basically today because CNMB, the regulator in Spain, banned them, the marketing of them. Futures you can, so obviously that opens door, right? Like the solicitation, and many countries you mentioned as well, have done the same thing. So yeah, I do see it. I mean, I don't see it as okay, well, we got futures now, come here, kind of like that type of sort of strategy. I more see it as there's a product that we would like to market to you because we believe that it delivers value to your needs, from that strategy. But yeah, like I do see it as a tool that we can basically look to leverage to attract more clients.
Pavel, from your perspective, like a brokerage company, what kind of client profile you can expect? What is the difference with CFDs? Is it more like bigger clients? Is it different experienced clients?
Well, I mean, to retail, we haven't launched it yet, obviously, so I don't know. But what my expectation is, I think we, at least initially, I mean, Richard mentioned, so the spot quoted futures, they're coming out, and the notional value of these contracts is a lot lower than the typical E-minis or E-micro or the micro E-minis. So, but if we talk about classical sense, I would say yes, I would expect clients with larger balances simply because margins are much higher. So you need to, like this, in order to trade it, you need to have more capital, and obviously you cannot just go with just the margin that's 100% of your balance. You need to have some cash layover. But I think as the guys are developing more and more retail-friendly, longer expiry products, lesser notional value contracts, I feel normal, let's say, retail clients. Well, when I say normal as well, because retail clients in different regions have different, values, right? But I think we'll see an uptake from those clients as well. But initially, I feel like, so it will be I don't know if sophisticated, so certainly like those with larger balances, initially at least.
Any idea also about geo-targeting, what the regions can be most interesting? And actually, Richard, you can see it's like insider also.
I'm actually here to learn something from Richard. But
yes, I mean, obviously we do track the data. We don't give out growth numbers on a country-by-country basis. But I will say, obviously, we're growing phenomenally in the Middle East at the moment. Europe is a very important region for us. UK is growing. I mean, you're starting to see some of kind of the US entrances into the UK markets later on this year. But yeah, Middle East for sure. There's a couple of regions within the Middle East as well that won't be, as they kind of open up for kind of basically derivatives, they won't be allowing CFDs for their end users, so will always be futures. The account sizes in the Middle East, kind of shock horror, are way higher than we see in some countries in the EU as well. And I should just mention, kind of, Pavel mentioned it briefly, on the option side. Our options are options or futures. We're seeing huge growth in options at the moment because these markets lately, especially in the last couple of months, have really lent themselves to options. When I was an options trader, the expiries were every quarter. So obviously it's quite expensive to kind of pay the premium because you had a lot longer time for the kind of that trade to get to your price. Then we went into kind of monthlies, then weeklies. We've now got daily options across all our main products. And the other week when we saw a lot of people getting downside put protection for over the weekend, I'm sure you've seen it in all markets at the moment. But even waiting for tariff news, people buying way out the money calls for same day expiry at 52.50 in the S&P when it's trading for 4,600 for like 3 ticks. And I mean, these were probably the biggest payouts I've ever seen in options markets in my career.
Yeah, it's interesting. So as we are limited in time, I will give a possibility to audience also to ask our guests. So we have their microphone.
Hello. I will just say one thing while waiting for the question. When I'm speaking to obviously the CFD brokers in terms of people that are looking to get into futures, they say basically, how do we do it? It's connectivity and it's kind of so it's basically how to access the exchange and then getting a clearer or an FCM to have your account because we don't take money directly as an exchange. The other thing is kind of how you make money commercially, okay? So it's a totally different business operation to a lot of people are used to. This is transactional only. So CME Group, all we do is provide deeper liquid markets and match buyer to seller, seller to buyer. We charge a transactional fee, okay? The FCM, where you hold your money, will have another fee for you in terms of the clearing fee, and then the broker will just charge their brokerage fee on top of that. So the whole thing is just a transactional business, whereas obviously in the CFD world, a lot of people generate their revenue from either kind of booking it or internalizing, whatever they do. So it's a different mindset, okay? But it's a very kind of clean way of operating too. There's no black swan events, there's no kind of downside risk. It's just a transactional business.
Yeah, obviously that begs, I mean, on that side, especially when it comes to retail, because retail, especially the commercial setup, could be quite complicated with the partners, rebates, networks, custom agreements. So that in a way is something that needs to be looked at, because of the underlying mechanism is different, right? So like you need to then sort of try to equalize it somehow, so it's appealing as well, like to if you're working with partners, so those partners are helping you generate business.
Your trade execution side, which size if you are, reduce it, and the expiration date that you're reducing as well.
On the spot quoted futures, yeah.
At what point does it get into sort of binary option territory? Where does it become gambling and less of a speculative tool?
So, I mean, our spot quoted futures are just a future like anything else. It's a 12-month expiry, so it hasn't got the kind of the event type trade like you see in the kind of own binary option space or the events space that you're starting to see in the US. This is out and out a future. It's just a 12-month expiry rather than the kind of quarterly or the monthlies that we have. The main sell for obviously the end users, the brokers, is just a notional, just way, way smaller. As I say, even on micro micro NASDAQ is 2 times the index. Okay, so it's about 40,000 at the moment. We trade 5% margins, so it's like $2,000. This is, say, 0.1 multiplier, so you actually need only 100. So it's a different concept to from the binary space for sure.
And how about the options you were saying?
Oh, so the date. Oh, right, yeah. So our daily options, all our options settled out back into futures. Okay. So at point of expiry, they settled back into the future, which obviously isn't manipulated because you have thousands of counterparts trying to fight for the best bid and offer, and they basically control what the price settlement process is. It's not the exchange. We're not acting as a house. We're just matching buyer and seller, and it's a total transparent open market.
Yeah, it's nice.
It's a very good question, though. We get kind of, when we first started, and it's kind of picked up in a lot of press, and this does get asked, so it's a very good question.
It's nice you mentioned about options. I think it's futures and options will be more relevant even to talk about this business line, because CFDs, it's a different story.
Yeah.
Maybe it's for next time.
Yeah.
We will have in mind about it.
I think options is obviously, like in the US, is like a very widespread, let's say highly traded. I think from a European perspective, I think there needs to be a bit more education, on that product, because I think people are just afraid to touch it.
Yeah.
And obviously, Big Short or these kind of in the media been kind of covered, right? So. And the GameStop and the 2020 craze, the Wall Street bets. So I think it needs a bit of education, because there is that association, at least in the European mindset.
I mean, this is a funny concept, because a lot of people think options, isn't that a risky asset class? It's like, it was brought out to mitigate risk.
Yeah.
It was actually a kind of risk management tool that they were brought out for. So it's interesting when my daughters actually were kind of asking me about options because they heard about it in Squid Games. It was referenced. It's always referenced in kind of US programs as well. Options. They're very well known in certain regions, but for some reason over here in the UK especially, the financial literacy just isn't there. But in terms of financial literacy, just in general, we're nowhere near the US. In the US, like 65% of people invest in stocks. Over in the UK, it's like 27%. So when you think about this 450 million people in the US, greater kind of EMEA, there's over 2 billion. So I think the growth is over here, not the US for sure.
Yeah, sure. Thank you. So here we are with our time frame. Feel free to talk to Richard and to Pavel after. And thank you for being here.
Thank you for your time.
Yeah, thank you for the
Thank you.
Thanks.